Hello and welcome to the September monthly update for Utilico Emerging Markets. I'm Jacqueline Broers, Deputy Portfolio Manager. This month, UEM's NAV total return decreased marginally by 0.1%, underperforming the MSCI Emerging Markets Total Return Index, which was up 4.4% in sterling terms. Global markets in September on the whole ended in positive territory. The US market, the S&P Index, despite the slow start to the month on the back of softer macroeconomic data, ended up 2%, driven by the long-anticipated start of the US Federal Reserve rate-cutting cycle. The ECB also lowered rates during the month, whilst the Bank of England held rates. The big shift of the month, though, was the Chinese market. The Chinese market during the month started sluggishly as retail sales and industrial production all continued to slow. However, on the 24th of September, the Chinese Central Bank, the PBOC, announced a slew of measures to revive growth. The epic stimulus package helped to boost the markets, with the Seng and Shanghai Composite Index both recovering at the end of the month, up by 17.5% and 17.4% respectively. The easing of the US and Chinese monetary policy helped many other emerging markets deliver solid market performances. The Philippines PSCI index was up by 5.4% for the month, benefiting also from the Philippine Central Bank cutting interest rates, as inflationary pressure continues to trend downwards, whilst the Thai SET index was up by 6.6%. The Indian market was also up by 2.3% as macro conditions remain favourable. Brazil was one of the outliers for the month, with the market down by 3.1%. The Brazilian Central Bank bucked the trends being witnessed in most countries and raised interest rates, the first time in over 2 years, to 10.75%, with the central bank indicating that there are more increases ahead as they tackle a challenging inflationary outlook driven by stronger than expected economic activity. Further, the Brazilian market was also not helped by concerns around the government's loosening fiscal discipline. The Turkish market was also down by 1.7% as inflation continues to run higher than expected, complicating the outlook for monetary policy decisions. Within UEM, there was only one change to the top 30 during the month. Vietnam Holding Limited replaced China Datang due to share price appreciation and a reduction in position of China Datang. The portfolio had mixed performances in September. Strong performers included 3 Chinese companies, Shanghai International Airport, Sunny Vision and China Gas, up by 16%, 13.1% and 9.4% respectively, benefiting from the recently announced Chinese stimulus policies. Santos Brazil also saw its share price increase by 13.8% as it was announced that CGM will acquire a 48% stake in the Brazilian port operator and launch a public offer for the remaining shares. UEM's share price total return was down 2.7% over the month, with the discount to NAV widening to 18.4%. UEM continued to buy back shares during the month and also paid its first quarterly dividend of 2.15p per share. For more details, please do read UEM's September fact sheet.